Hey, this is Crystal Miller with another Tip Tuesday for you. Today we're going to talk about interest rates. I feel like this is something that obviously everybody asks about when applying for a home loan. And even if they're not and they're just hitting up casual conversation, it's like, hey, what's today's rate? Well, there isn't just a blanket rate. And that's something I wanted to clarify a little bit because it's not like they just post it and here's what I write my loans for this day. You as a borrower actually determine what your rate will be. You qualify for a certain rate. And there's 6 or 7 things that affect what rate you're going to get. So the first one is your credit score. That predicts to the investor how reliable you are to pay this money back. How much is your loan amount going to be? The higher the loan amount, and extremely low loan amounts usually get a little higher interest rate. Your down payment. How much money are you putting down? So the more money you put down, that shows the investor you've got skin in the game. You've got a vested interest and you're less likely to foreclose on this down the road. So they give you a little better interest rate for that. So the smaller the down payment, oftentimes the interest rate reflects that. The loan type. Conventional has got a little different interest usually than what a government loan will have. Oftentimes the government loan interest rates are a little more competitive, but there's also completely different parameters for mortgage insurance on those. So you just kind of have to have a little bit of education on your products and just find out what fits really best for what your need is. The loan term, that affects your rates. The longer the loan, the interest rate tends to be a tiny bit higher. If you're looking at a 15 and 20 year instead of a 30 year, that's going to help your interest rate. And the loan type affects it. So is it an adjustable, an ARM rate, or is it a fixed rate? An ARM rate is usually going to be a little bit better, but it also has the ability to significantly increase over time. So again, you'd have to figure out, what your priorities are and how long you're going to be living in the property and things like that to see if it's really worth capturing that lower interest rate by going with an adjustable mortgage. So it's a really fast kind of slam through the few things that affect your interest rate, but I just want you to know it's not like we just post it and here's our rate for the day. So there's definitely things that affect the rate that you are eligible for. So if you want more information on that, or if you just want a little bit of a conversation about what your options are, you can go to millermortgagepro.com or you can always hit us up at the office. Have a great day.